So let me tell you why this rally is the real thing. And I've got 5 reasons. First and most obvious, there's an incredible thing about stocks. They may just... We're all going to die. They may just be pieces of paper, but you can sell them and take that money to the bank. And you know what? When you go to the bank to deposit your winnings from the big Fed-induced bubble, yeah, thank you. They don't ask you how you earn that money. Never once has anyone said, you know what? The teller window, I can't take that money. It doesn't count because you got it for an assist from Alan Greenspan. God, we got like thermonuclear... I'm not done. Or maybe you got it from Bernanke or Janet Yellen, yes! Or Jay Powell. A win is a win. It's not asterisk, for heaven's sake. Second, it's true that our stock market is being inflated by money from overseas. Foreign investors are desperate to own dollar-denominated assets. Some of that's because the United States is in better shape than many other developed countries. Some of it's because central banks are all over the world aggressively debasing their currencies. So more and more money flows here. You know what my response is? My response is, who cares? We have a strong currency. The dollar's a magnet for money overseas. So what again? A win is a win. Hey, by the way, speaking of central banks, most central bankers would kill for the so-called bubble that Powell's given us, talking about uncertainty. People who make monetary policy want the economy to do well. It's not that complicated. Sometimes they need to tap on the brakes to stave off inflation. But they're not some kind of neutral referee, for heaven's sake. When business slows down, they're supposed to cut interest rates. That's what Powell says he'll do. He's not cheating. He's doing his darn job. Third, I've heard all day that the game is rigged for stocks to go higher. Oh, give me a break. The fact is that inflation's so low in this country and demand for money is deteriorating so fast that bonds just don't give you much of a return. That's how bond prices are determined. That means stocks, especially stocks with decent dividends, are the only game in town. Fourth, I know the situation is far from perfect. In a perfect world, I'd prefer for stocks to go higher because the economy's growing. What's wrong with stocks going up because the Fed is taking action to boost that economic growth? If you thought business was going to slow down and you were worried about the market, then after what Powell said today, you should be more willing to own and buy stocks because you're getting a jump on better times, and stocks anticipate better times. Fifth, and finally, I am so sick and tired of hearing that it's all about the Fed. Yeah, 2 for 1. Sure, the sector and the asset class matter. But if you invest in the best companies, you're going to make money over the long term, with or without the darn Fed. And if you invest in bad companies, just good companies with bad stocks like Levi's, even the Fed can't save you. Now, there's more to this game than interest rates. There's such a thing, say, as ingenuity, competitiveness, power of invention, technology. When you look at the top 10 stocks that led us from S&P 2000 to S&P 3000, they're all examples of sheer raw brain power and technology at work, right in front of you, almost like Edgar Allan Poe's purloined letter. But the bottom line, will you please save the darn bubbles for the bathtub, for heaven's sake? The dollars you can make in this market, well, let's just say those dollars, they're real, and they are spectacular.
Don't miss a second of Mad Money. Follow @JimCramer on Twitter. Have a question? Tweet Kramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.